Hello, today is Saturday, the 29th of March, 2025. And given that it is the end of the first quarter of the year, I'd like to go back and start to see how these don't trade fade portfolios are doing. So remember last year we did these portfolios and they all significantly underperformed the index, which made sense because the breadth was very narrow last year in the indices. So therefore, unless you happen to have loaded up in those few stocks that were outperforming, you were going to underperform, and that's what happened to a pretty big extent last year. Now this year we come in and the indices are down, but the breadth has actually improved, which means a lot more stocks are doing better than the index than before. So we would expect, and we certainly have here, that this type of investing would do better, and in fact it has. I mean, we do a bunch of portfolios. This is the Barron's Roundtable, the picks from the Barron's Roundtable at the beginning of the year. And they are outperforming by 5.5%, right? With their picks, which is pretty good. These guys underperformed the index by 20-something% last year, but they're doing a lot better this year, as I say, because breadth is better. So these guys are in a wider array of stocks, so they have a good chance of outperforming. This was the picks on the CNBC acronym game that they play at the beginning of every year. These are all the picks, and they are outperforming, although not by as much, but they're almost 2% better than the index, which again makes sense because of the breadth thing. Then we break out our friend Dan Nathan, since he's our guru, and he is outperforming, although by less than 1%. You know, Dan sometimes struggles, but was doing better earlier, but recently has come back down. But again, Dan Nathan outperforming the index. Go Dan. He's only down 4.2% on the year. And then we have our randomness, where we pick here just the first 38 stocks listed alphabetically, and we choose 38 because there were 38 stocks from the Barron's Roundtable that were done. So this has done better than the index as well. Just randomly taking the first 38 stocks alphabetically. How's outperformed the index by almost 3%. Still down on the year, but has outperformed. And then we have GPT, who was the champ last year. Did not outperform the index, but outperformed all of these other portfolios. And that one's actually the worst this year. Whereas the index is down 5-something%, this one's down 7-something%. So it's over 2% worse than the index this year. So funny how the ones that were best last year are worse this year. And the ones that were worst last year, which was the Barron's thing, are the best this year. And again, I don't think that all of a sudden these people have become better stock pickers necessarily. I think it's just a mathematical thing where more stocks outperforming the index than did so last year, more chance that an active manager can do better than the index. And that is exactly what's happening. So no big surprises there. So that's just kind of the follow-up to this, which we will do at the end of every quarter, just to keep it up and see how they're doing. Notice how from the beginning, when we started doing this at the beginning of 2024, all of these portfolios have continued to way underperform the index, which would be expected. But hey, at least they're doing a little better when they should so far this year. Okay, so that's kind of the wrap on that. I hope you enjoy it, and I hope we're learning some decent lessons from that as well. Okay, thanks, and we will talk again soon.